Thanks.
How large of a problem is the anti-corruption campaign that we've seen this year? Let's start with Mr. Ling. If you could tell us, what impact have you seen on your company, on sales, on the patterns of your consumers since this has been imposed by the government?
You mean the anti-corruption?
Correct.
I think we are just private sector, so the anti-corruption doesn't have too much impact on us. But for those wide industry, they have to serve some of the government official. They may have a hit on the demand and also the share price in Asia market. Actually, I consider the last question you have asked for the economist, that I think China can easily to maintain the growth because the private sector is so small and all of them are just public sector with government control, and also the monetary policy is easy to give some relaxation to the economy. So, but that will not be sustainable. So, in order to have a better economy, the government, apart from anti-corruption, they have to do deregulation. So, to release some freedom to other sectors rather than just property. And also the property market should not just go one way to serve the wealthiest person, because the lowest sector also have this kind of demand, but the property price is too high. And so that's it for my part.
Maybe I can add a bit in terms of anti-corruption policy in China. And then I deal with, in the beginning of the year, I deal with what we call SOE, state-owned enterprise in China. I stay in Beijing for 3 months and I look into the policies, procedures, and then it's a SOE bank and JV with the insurance company. And then with the introduction of anti-corruption policy, and then they have to revamp or revise or enhance their travel entertainment policies. Okay, they go into real detail in terms of how much you have to spend when you travel, you go to a hotel, in terms of meals. Okay, and then I think the China SOE, they always react almost at once. Okay, once with instruction from the party management, and then internally they also have their own small so-called party management. They manage the anti-fraud policies within their so-called their own party, and then they also manage the anti-corruption. And then in a usual financial institution, we have so-called 3 lines of defense, and then first line being the frontline people, second line of defense meaning the risk management compliance, third line would be internal audit. Interestingly, when I work with those SOE company, they taking out some particular policies and particular anti-corruption, anti-fraud. They do it out of the 3 lines of defense of a global company, and they do it separately. Okay, so this is the interesting phenomenon I observe and add value. Hopefully, if they can benchmark some of those global practices going forward. Thank you.
One more thing to add is that China has passed the budgeting law, and therefore it will just like US. That every local government has to do the budget so that their expenses on entertainment, etc., will be monitored by the public. That will be one way to improve the anti-corruption, and that's it.
If I may ask the other 2 economists about the weakness that we're seeing over in Europe, do you think that will have an impact on China at all?
Well, Europe has been the largest export market for China, and then it's fallen back as the demand there has collapsed. And I think it is having an impact. The growth in jobs, the growth and investment in the exporting sector, the growth in exports themselves have been slowing down significantly. And this is clearly because of one of the major markets in the world for China, for the world, is underperforming. And I think that if we look at the policy approach that has been adopted in Europe, the many different policy approaches, and we look at what has happened in Japan in the last 25 years, there is a clear concern that Europe is going to be in a long-term, very, very low growth market, possibly even featuring deflation over and over, as was the case in Japan. I don't think it's a high probability. I think that it's one that we need to keep a very close eye on. But that prospect means that China has to find different markets, and they are pushing into the more stable of the emerging markets. Latin America is still very, very new territory for Chinese exports. Southeast Asia is more mature, but it's also got a lot more prospects than, say, Africa, where we're looking at really an extraction relationship. And the United States is a well-established market, one that is subject to very little fluctuation over time. The average household now has given up on trying to find something that's not made in China. My mother sent me a shirt, and she was very proud that she found something that was not made in China. It was made in Macau. I had to explain that that was, part of China these days.
Yes, exactly. I think one of the issues for China is to find new markets. But then, if you go to Brazil, for example, Brazil has been invaded by Chinese product. And there is a lot of issues now in Brazil about the disindustrialization of Brazil because of China. So in many countries, the huge cost competitiveness of China compared to the fact that in Brazil, for example, the industry is not very competitive indeed, raises a lot of issues and questions. And I think this is something that the Chinese have to be aware of now, that the fact that, yes, they have to conquer new markets, that's for sure, because exactly as David said, the growth in Europe is going to be low. But then it will raise other questions about the way China impacts other economies. As an importer, it's mostly raw material buyers, and a lot of countries are not happy with that. As an exporter, it tends to kill a bit the local industries. And this is being a big challenge for many economies who want to remain producing industrialized products.
Yes, I think, this is a very interesting point. I think, maybe if you read newspaper, there's a new concept called the Marshall Plan from China, which is that China want to export, the overcapacity to the underdeveloped economies. So I think, looks like, it's not that welcomed by the rest of the world, but I think it's welcomed by the domestic producers because, the utilization of the steel sector is about like, 75% only. So I think, we have to think about this, whether China, something like, it's not, China want to export some of the stuff, some of the capacity to the rest of the world, but maybe it's not that, it will kill the local industry. And to that extent, to the other sector, the other thing is that, China actually, try to chase more assets in Europe as well, like the Portugal electricity company, something like this. China actually also wants to expand more in Europe, and also I think there's two different strategies. In Africa, China want to expand the capacity, but in Europe, China want to grab more assets. So to some extent, China has been accumulating too much wealth that need to be distributed globally. But China need a clear and more transparent and more welcome the strategy by the rest of the world rather than just look at its own interest. I always want to expand more, but it's not to some extent maybe this will create a lot of problems going forward as well.
Yeah, there is another side of this, which is the export of high labor content industries. It was mentioned earlier in our session about Cambodia getting the textile industry and Bangladesh as well. These are countries that are delighted with China continuing to grow and progress and move up the value-added chain. And I think that there will be another wave of those kinds of products. Perhaps it'll be toys, or maybe it'll be something above the low end of the garment market and shoe market. It might be games and sporting goods that will begin to move into these lower cost production centers that will not only change the nature of China's involvement, but also I think it's very important to recognize that something around 55% of China's exports are by foreign invested companies. And as much as half of that is managed here in Hong Kong. They may own the factory, they may own the machinery in the factory, they may only own the customer. But the decisions are being made here, and if there's a perception that China is going to be considered by other parts of the world to be more of a competitor than a partner, then they are free to move those factories, those production orders, those capacity to other parts of particularly Southeast and South Asia, where they have experience, the owners here, and where they can diversify the risk to their own companies.
I'd like to take this opportunity to ask or take a check. We do have a question from the floor. So if we can bring a microphone up here, and sir, if you could identify yourself before you ask your question, please. Tay Hong. Okay.
Thank you. Safrul Rasif Amir, Asuransi Central Asia, Indonesia. And it's always good to hear about the economic analysis of the current situations and the projections for coming years. And thanks for Coface to be able to present good speakers in explaining this topic very, very nicely, especially from the country-by-country perspective. However, I haven't heard from this morning's sessions the analysis about the establishments of the ASEAN Economic Community, which is going to be commenced end of 2015 and or early 2016. Is this cooperation is going to increase the trade, either regional trade or world trade and investment, and as well as country risk or regional risk? This is going to be very important, especially when this cooperation is going to follow the success or the unsuccess story of the European community. Thank you so much.
Any comments?
I had a larger regional role than Hong Kong, which was sort of 2 miles deep and 3 inches wide in my current capacity. But in the 80s, I remember hearing that the ASEAN Free Trade Area would be in place and fully functioning by 1995. And then it was a few years later and a few years later. This time, I think it's getting there. We've had promises that ASEAN would be a fully integrated free trade area, if not a customs union, just a few years in the future. And we've heard that for a number of years. This time, I think we're actually getting there. There is still a lot to be worked out, particularly when you have competing industries in 2 neighboring countries, and both sides wanting to protect their employment in particular. But I think that this time we're actually beginning to see a coalescing of interests that is going to be challenged by politics. It's going to be challenged by protected or protectionist vested interests. But there seems to be a sense that this is the last chance. India is coming up now as a serious economic competitor, particularly for investment dollars. China has been there for a long time. And if ASEAN were to sadly postpone this integration another decade, I think that the chance could be lost. So I think at this point, I'll use Premier Abe's favorite phrase, Tina. There is no alternative.
David, if I could just follow up on that. we just had the APEC summit wrapping up and basically taking precedence over the United States and the TPP that they were trying to push through. Now China is going to be leading some sort of a free trade arrangement. What comments does the floor have about that?
Who designs the free trade agreement that best suits themselves? ASEAN will design ASEAN's free trade agreement. The United States has pushed the Trans-Pacific Partnership, and now we have a competing model. If we could cut through all the differences among them and come up with something straightforward, we would have a working WTO, but we can't. So what we're working with today is what is the economic equivalent of the coalition of the willing. If you're willing to get in there and offer your market in exchange for somebody else's on terms that both sides can agree to, then you can sign up for any one of these and be quite happy with it. We now have a change in the political balance coming up in January in the United States. Traditionally, Republicans have been more willing to move forward on free trade issues. The Tea Party is not nearly that enthusiastic about trade. And so we're now in a situation where we're going to have the traditional opponents of a Democratic president wanting him to have fast-track authority, and his negotiating partners saying, well, you'll only be there another couple of years, and then we'll have a whole new administration, we'll have to have a whole new reauthorization. So why would we want to invest all of our political capital in coming up with a solution now when it may not actually materialize? So we've got politics working in several different areas, and I think that that what we really need now is for someone somewhere to cut through it all and say, right, here's a proposal, it's a minimal proposal, sign it, then we'll go to the next step, and if you like those terms, sign that one, and work step by step to build it up to the point where it's something meaningful.
I think it's a kind of political game between China and U.S. That country in East Asia and APEC to follow U.S. or follow China. It's a kind of game that if all the Asia Pacific countries have more trade in China, then China can have more political power over them on other issues in the future. So I think those countries will try to look into detail of the arrangement or agreement, because they have to see whether this is a mutually benefit agreement, or and also the legal framework in China is good for their business, or the U.S. mechanism will be much better for them to work. That's it.
I'm not expertise on this, but I think, as far as I know, I think, TPP is a bit more, actually it's a bit more different from the free trade agreement. So for me, I think, China tries to duplicate, let's say iPhone 3, but, US is doing iPhone 6 right now. So I think it's a bit different. So basically, this is a new stage. The TPP is a new stage of the next generation of the free trade negotiation agreement. So, so basically, China tries to create trade flows, but US try to create service flows and as well as capital flows. So basically, I think this is the difference for me. And also, I agree with that. This is a political, or something like power shifting, or something like competition, among different countries. So let's see what is going to happen. I think China will have more free trade agreement with more countries going forward. Yeah, thanks.
Are there any more topics from the floor? Otherwise, we will continue with another question from me. And up, gentleman with the blue tie.
Got a loud voice. Eric Dribel, Standard Chartered Bank. Earlier, I think Rocky mentioned that the steel, returning to commodities, and iron ore prices are a barometer of the economy. One of the major investment banks predicted that iron ore will drop below $60. And it was also flagged that there was a big red dot behind metal trading in China. Should we be worried?
I think this is a very good and interesting question. First is that China's commodity trading or commodity financing, there is a lot of arbitrage inside. Because commodity trade normally is seen as by bank as a low risk business, so they can provide a very low interest rates for this kind of business. So basically, what we have seen is that a lot of companies use commodity trade to get low cost funding from the banks, and then finance other sectors. So this is a bubble, and this is a risk. And then back to the commodity demand, I think China's commodity demand always stable. If you look at China's steel output, I think every year is around like 3-4% growth, very low, because China has already have a very sizable steel production. So the demand is there, the demand is stable and sizable, but the problem is that the growth will not be there, and also the growth will be cracked down by the shadow banking meltdown. So basically, I think if you project, let's say the BHP project, 15%, growth for China's iron ore demand, and also they increase the supply, the iron ore price will be go further, will be go down further. But if they slow down, if the production, I think the cost curve for the iron ore right now for many domestic mines is about 70 or 75. So I think the cost curve is already there. So if this situation continues, some of the domestically produced mines can shut down their production. The price will be stable at around like $70 per ton, rather than go to 60. So basically, I think this is another deleveraging story in China. The risk is in the high leveraged trade companies rather than the steel makers themselves. So I think you have to differentiate the risk in different sectors. I hope I answered the question. Thanks.
Any other questions? In the back, please.
I'd like to ask you a question about cash flow. This is something that we have been watching very carefully, is how companies are able to continue to finance their daily operations, not new investment, but continued cash flow. How much of a concern is it in your business to be able to predict that you can meet all your expenses every month for the next year or two?
Yeah, actually, we have a really good cash flow in our company. We always have surplus free cash flow, so that we can pay almost 60 to 70% of dividend payout. The most important thing is that for our credit management, all our distributor and customer have linked up their system with us, so that we know their inventory and sales data, rather than relying on the financial statement, which is quite you don't want to see the you won't trust the financial statement, because all of them are quite tax driven in China. So in this case, we have real data. We know the sales data, inventory data, so we can see when will we give them more inventory or more goods to sales. So we have strong cash coming in, and then our expenses, etc., will be have a very good control, and also for all raw materials, etc., we will do early planning on that, so that we can get a really reasonable price. Yeah, thank you.
And there was a question in the back.
Xavier Farco from Coface. There was not a question, and maybe some addition to the steel industry or impact. We should not forget probably the risk projected on other countries, because if you have this kind of iron ore, commodity, metal, generally speaking, steel going down, that has an impact on the producers. We have seen already some of that in Australia, where because of the cost of extraction, basically miners have to downsize or postpone investment, and that also in turn have impact on other economies at the same time. So it's not only China we're talking about, but also the impact elsewhere, which should not be forgotten.
Thank you very much for your contribution. And we just have a few minutes left, so before we wrap things up, I'd like to ask each of our panelists here, in a small amount of time, if you could just tell us what you think is going to be the main growth driver in your field of expertise for next year. Let's start with Yves.
Well, as a European point of view, the most important driver will be supply-side reforms in Europe. It's absolutely key that we reduce costs and we improve the corporate situation in many countries. And the second driver would be, I would definitely think that people have less to think about country matters than what the gentleman said about digitalization. I cannot say that word in English. It has a huge impact not only on services, but it has also a huge impact on traditional industries. For example, I heard a very big company doing electric appliances explaining how the digitalization will help them to reduce the cost in controlling their plant, for example. So with the remote control through their iPhones. I mean, it's amazing how the impact it has. And I think that because we economists look at potential growth, there is an element that is not in the equation, it's innovation. If we have a very strong innovation, then we can boost a lot of growth. And I think in Europe we have some advantage on that. We have sometimes a good education system, R&D, skilled people, and maybe we can win over the doom of deflation and low growth first through reforms. Absolutely, that we need to do these reforms, but also innovation.
Yeah, I think I definitely rely on your comment, as I mentioned earlier. Okay, I think two things would be the driver. The key things would be the price competition, and then another area would be innovation. Okay, I think nowadays we cannot stick with the traditional way of doing business, and digital market is definitely promising. As you be aware, Alibaba go public in US. Taobao is a subsidiary of Alibaba. Yesterday they announced a huge turnover. Okay, they have a record high. Okay, and then a lot of digital marketing campaigns, and then are tied in with day-to-day activities, whether you are in the trading environment, you are in the financial market. And I think because of the nowadays we cannot afford too many layers, even in the organization, a very lean organization. I think in the distribution side as well, we cannot afford too many layers. So digital is one of the solution, and plus innovation. You do things in a creative way, and then because of our new 80s or 90s, and then these are the booming environment and area they should pursue. Okay, and definitely as an entrepreneur, we are supporting the new ideas. Okay, yep. Thank you.
I'm going to carry on with the same theme, but I'm going to twist it into price deflation. I was talking to an author last night, and he said his book was going to sell for about $19 US, but on Amazon you can get it for $2. The disintermediation of the financial sector, where you're going to see an increasing crowdsourcing or customer to bank to business funding. Alibaba, that's the 5th time it's been mentioned today. I've been keeping track. Where you have deliberate, transparent competition to drive down the price. This is going to spread rapidly throughout the economies, the developed world, and they're already coming into the emerging markets in things such as group purchasing and that are very popular in some parts of China. And this is going to be driving margins down at a time when financial markets are very, very nervous about providing capital. So I come back to my question, but as a comment rather, is watch the cash flow.
Actually, for our industry, growth driver is all on the government policy. Just released out that they will try to promote the sporting industry with better sport event and also something for the advertisement industry, etc. But I want to comment on just like digitalization, we are also doing e-commerce. I think it's quite difficult to copy another story of Alibaba, because actually the e-commerce can be success. One of the key thing, two key thing is that they have credit information and also the electronic payment system, so that everyone have credit information. They are confident to make the trade, and also the logistic for the trade. That means they can get the goods in a few minutes. A few days. So that these two are quite important, and therefore and also maybe I comment on for China, the real growth driver will be I think how to deregulate those approval process, so that people can be easily to get approval, reducing the hidden costs on to get the approval, and also giving more education to those people, and then having freedom to speech, and also therefore innovation can easily come out rather than just work at science or military industry to have new innovation, because without innovation, and also the opportunities for the younger people to have their own business, the real energy of the economy will not be easily come out. And also they have to treat the rural area and also urban area equally, so that they will release the economic power, and also I think people in China would like to consume foreign goods rather than local goods. So in order to improve the internal domestic demand, to have the better economic growth, I think the local business have to do better on the quality and give more confidence to the consumers, and that's it.
Yes, I agree. Actually, I just bought 2 milk powders yesterday. Yeah, I think basically a driver is always the three word. It's one word actually, TFP. We always believe that TFP, total factor productivity, is so-called the most important driver for the economy. So in China, the total factor productivity actually, the contribution from this declined in the past decade. So China tries to chase this, and also I would like to mention one thing is that actually we talk about aging population is rising in all of the world. That is another opportunity for our new economy. And also maybe an insurance company is the driver for the economy. So yeah, that's my answer. Thanks.
Ladies and gentlemen, thank you very much for coming to the 2014 Coface Country Risk Conference. There are two things I need you to do before you leave. The first thing, there inside your little packet, there is a survey, and they've asked that you please fill that out and leave it with the front desk before you go. And also help me to thank the panelists this morning, Yves Zlotowski from Coface. We have Barkis Ip from Telos Capital and Risk. We have David O'Rear from the Hong Kong General Chamber of Commerce, Mr. Paul Ling from ANTA Sports Products, and Mr. Zhou Hao from ANZ. Thank you very much for coming this morning.